Were you aware that Jim Cramer recently made a significant disclosure regarding Tesla stock? Tesla continues to make headlines, albeit not always for the right reasons. Continue to tune in and observe to see what Jim Cramer has to say on Tesla stock. Today, Tesla has become a household name, successful enough for the majority of people in most nations to be familiar with the brand. Because of this, professionals and analysts have praised it and criticized it in equal measure. You may learn about the significant update on Tesla stock that Jim Cramer recently disclosed in today's video. To begin with, who is Jim Cramer and why is his advice important? American book and television personality James Joseph Cramer is better known by his stage name Jim Cramer. He anchors Squawk on the Street and hosts Mad Money on CNBC. In 1987, Cramer founded Cramer Berkowitz and served as its senior partner, in addition to managing hedge funds. Jim Cramer founded Cramer & Co., a hedge fund, using his personal stock market expertise. From 1987 to 2000, Cramer managed his fund and experienced just 1 year of negative returns. In the end, he left his hedge fund in 2001, having made an average yearly return of 24% from 1987 to 2001, which translated into an average annual dividend of more than $10 million over the course of those 14 years. In 1996, Cramer co-founded TheStreet.com, a website that offers stock market commentary and guidance, while he was still employed at his hedge firm. Cramer holds the second largest stake in the company. As of August 2019, the company's market capitalization was $1.7 billion, but in 2005, Maven bought the street. Jim Cramer agreed to host Mad Money, the CNBC program for which he is best known. Instead than trying to influence viewers' opinions, the show aims to educate them on how to think like seasoned investors. Over the last 10 years, the program's popularity has steadily increased, positioning it as one of CNBC's most watched investing programs. All my career, I have been fascinated by companies with vociferous bulls and ferocious bears, if only because they can be so entertaining, Cramer once stated. 2019 saw the conversion of a scathing Tesla critic. Jim Cramer of CNBC's Mad Money went from being an agnostic skeptic of the electric car producer shares to being a blatant bull. The host of Mad Money said that he had grown to love Tesla and now views the company as a battleground stock. Cramer declared, "Tesla is a huge buy right here." By 2022, though, Jim Cramer declared that he preferred Ford equities over Tesla. Though he was formerly highly excited about Tesla, the company is currently regarded as one of the best options in the EV market. Just last year, the EV company's shareholder returns were 9.7%. However, Cramer said in a March interview that he prefers Ford stock to Tesla shares. He claims that Ford is getting ready to overtake Tesla and take the lead in the EV industry. By 2026, Ford is reportedly hoping to build over 2 million electrified cars. Cramer claims that James Farley, the CEO of Ford, never creates anything that is not profitable. This is supported by the fact that once Farley took over in 2020, the company's stock price rose. Like Musk, Farley intends to shift the company's focus from internal combustion engines to electric vehicles, just like Tesla did. Recall that Jim Cramer expressed disapproval of Tesla's upcoming Cybertruck. This is going to be Elon Musk's first failure, he predicted. Naturally, this hasn't been confirmed yet, but the amount of pre-orders and reservations for the Cybertruck suggests otherwise. In addition to criticizing Tesla, Cramer suggested switching to a Ford EV. While it's possible that Tesla may soon face fierce competition given the number of large companies starting to switch to electric vehicles, Adam Jonas of Morgan Stanley stated that the current EV market is a race that Tesla has so far won. He likened the electric vehicle EV sector to a marathon, saying that Tesla is leading at mile 21, while other companies are still in the second mile and, in a metaphorical sense, are still tying their shoes. In order to bolster his argument, he provided data on recent car deliveries, which show that Tesla is still in a solid position and is getting stronger as the marathon goes on. Nevertheless, the markets that Tesla and Ford are in are very distinct. In terms of AI advancements, Ford is still a whole generation behind Tesla, despite Ford's attempts to catch up. Why, therefore, did Jim Cramer select Ford over Tesla? A global recession is predicted by many experts, and some believe that this volatility stems from the macroeconomic environment as a whole. Cramer, however, has a bullish view of the market and thinks that if certain things go correctly, stocks will undoubtedly soar. In a recent interview, Cramer stated that a variety of economic factors might affect investors' perceptions of the stock market and their choices on the purchase and sale of shares. Despite the impression that Cramer has only set his sights on EV companies other than Tesla, it turns out that he has not endorsed any other electric car firm. Indeed, he expressed his opinion that Rivian is not the next Tesla. American electric car manufacturer and automotive technology business Rivian Automotive Incorporated. This statement is similar to that of Cathie Wood, an American investor, successful stock picker, and founder, CEO, and CIO of ARK Invest, a $60 billion company that makes investments in cutting-edge technologies like genomics and self-driving cars. According to Wood, Tesla is 3 to 4 years ahead of Lucid and Rivian in the battery market. She went on to say that Tesla is well ahead of practically everyone else in the battery industry because of their innovative approaches, particularly when it comes to introducing silicon into anodes and experimenting with ultracapacitors. Wood thinks Tesla is 3 to 4 years ahead of the competition because of these factors. Do you believe Tesla can continue to dominate the electric vehicle market? Post your ideas in the space provided for comments below. Recently, Jim Cramer discussed how to identify the next high-growth stock before it becomes popular. If you know where to look, you can always uncover equities with strong growth potential, he said. According to Cramer, sometimes it can be as easy as enjoying a business and its offerings, then doing further study to determine whether the stock is worthwhile to purchase. In fact, Cramer's daughter made the same decision in 2019 when she chose to invest in Tesla, a manufacturer of electric vehicles. She chose to hire a Tesla while traveling from Oregon to Los Angeles. According to Cramer, she had never been a car enthusiast before, but she was taken aback by how much she enjoyed operating an electric car and how simple it was to recharge. According to her, it's the most enjoyable vehicle ever, said Cramer. Although Cramer was dubious about the firm and emphasized that the stock was pricey, his daughter was sold on Tesla. Yet Cramer's daughter declared that she still had faith in Elon Musk, the CEO of Tesla. She added that because Cramer was too elderly to recognize the promise of electric vehicles, he had a prejudice against the company. "I'm going to save up to own a Tesla, and I want to buy the stock of Tesla," she said. Ray VR remembers what she said. According to Cramer, she actually invested in and witnessed a tenfold surge in Tesla's shares. He claims she bought it, completed the job, and had conviction. The key lesson here is to ask yourself if you enjoy a company before investing in its stock. If the response is affirmative, you should investigate the company's Securities and Exchange Commission filings in order to determine whether or not it's a suitable investment. Key performance indicators like sales, net income, debt-to-equity ratio, and cash flow are all covered in these reports. Additionally, you should educate yourself as much as you can about the business and its rivals. This can be accomplished by reading news articles, perusing the firm website, and, if accessible, attending the earnings calls. Selecting a firm you enjoy can be a terrific method to find a stock with growth potential, regardless of which one you choose to explore. According to Cramer, this is the reason it's critical to comprehend your preferences as a customer. According to him, businesses are more likely to continue producing high-quality goods even when customer demand changes if they develop an inventive product that you find appealing. It is imperative to emphasize the significance of thoroughly researching any stock you are considering. Even seasoned investors take the time and spend the money necessary to research and evaluate the information before making a wise choice. Visit Tesla stock and check out our other films as well.